Welcome back to Trading 360. I'm Nicole Petalides. We're live at the New York Stock Exchange. Stocks are selling off in a big way today, where it's time now for the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts. Here to take us through the trades, Joel Hawthorne, head of equity research, Retail Trader Magazine. Joel, good to see you. We got the jobs report. It's a new week and a new year. Down arrows. Some of your thoughts, big picture here for the first quarter for stocks.
Thanks for having me. Great to see you. Happy New Year to you guys. It's I think right now we're just seeing just some price action to the downside. Nothing that I think any one of us really are shocked about. I mean, the euphoria of all the price action we saw to the upside had everybody thinking that just this was just going to be a forever bull market or a forever bull momentum. But all of us know that the market moves in 3 ways, either up, down, or sideways. And this is just the downside of the recent price action.
Right, understood. All right. And then there's a different element, and that is the Chinese market, Chinese stocks. You're watching Alibaba, which sometimes can move with or against what we're doing here at home. What's the story on Alibaba for you today?
I think right now, just looking at the chart, I'm looking at a 1-year, a 52-week chart, and currently trading about 81 and change, 81.20 or so. I think as long as this stock has that kind of price action and trading below $87, I think I'm a bit of a bear. Obviously, we know this stock is very sensitive to any headlines or any news coming out of China. But right now, just the chart tells me that there's still some weakness here. So I'm going to play to the downside here.
And so let's hear what the technicals are. Looking at the charts, and Rick Ducat is all over that. Good morning, Rick.
Yes, good morning. An interesting chart, to be sure. We can see that we had this very sharp rally back in the early fall months, like September here, crossing above our old high point that we established here back in early late April or so. You can see that was a point where we took a brief pause and then just kind of rocketed up above 117, crossing into those 52-week highs. From there, though, you have a couple of different choices here. You could draw trend lines starting with that high point connecting here. By that measure, we have kind of broken above that trend line, and now we've crossed back below it. The alternate choice would be you could start from perhaps about here. That's after we had our bull trap type price movement here, where we had our sharp rally, our give back, and our subsequent rally that did not take out the old highs and then drop off there. So that was another significant high point, and that lets us create this white trend line here and this lower white trend line to give us this wedge kind of shape. By that measure, we're still within that pattern, but we are on the verge of breaking through to the downside. RSI bearish and breaking below its green upward sloping, very modestly upward sloping trend line there as well. So we're below all our moving averages. We're trending lower. When we overlay volume profile and standard deviation channels, we can see that we have actually given up this node here centered around 84 or so. The next stop could be here around 78 based on our volume profile, and then all the way down here, -2 standard deviation channel and the volume profile point of control near like 74.50 or so to the downside. To the upside, confluence of our moving averages, 252-day EMA and the 21-day EMA are fairly close to our -1 standard deviation channel, so look between 84 to 86 or so for resistance.
All right. Okay. Thank you for all of that. So, when we look at this name, we think about a few of the headlines that have been coming out. The first is that it says China-focused ETFs are facing uncertainty. Names like Alibaba and such. U.S. blacklisting name like Tencent. Then you have Alibaba, Baidu, JD, and more potential AI sanctions, pressure on China. All of these types of headlines can really move these stocks too. Joel?
Absolutely. And I think, right where the price is now, trading just above 81 or so and change, I think the move to the upside would have to be something that would be, very catastrophic as far as phenomenal news to move it above there. So that's why I'm playing the bearish side of it. I'm going to be cautionary by selling some options. So I'm going to sell the 90 call, simultaneously buying the 92.50 call, expiring February 21st. Pick up about a credit of 39 cents. Break even is 90. 139. Rick mentioned resistance about 84 and 86. My cautionary price that I like will be right around slightly above that, about 87. So anything below there for me still gives me a little wiggle room because my break even is 90 and change. But again, playing the downside because exactly what you said, Nicole, the headlines and some of the cautionary tales coming out of China.
Yeah, I mean, it gets exciting. And then, Rick was showing on the chart some of the downtrends that we're seeing. So that's your bearish play. Let's talk about ARM holdings. Now, this one here, 1 year, impressive, 93%. But of late, not so impressive. Some of your thoughts there on ARM holdings.
Yeah, this is another one here that's sitting roughly at a key level for me. This 139 and change price action right now is right around where I would say this stock could kind of move in either direction, maybe revisit some recent highs of last week or even get some downside pressure. And if we get some downside pressure, I expect it to really take an aggressive slide. So because of that, I think I'm going to be a bear here. I like the bearish side, and obviously I think some of the momentum that we've seen in this stock was priced in with just overall market momentum. So if the market is a bit weak here or even consolidates, I think this stock will continue to be a little weaker here in the short term.
Okay, so some weakness in the short term. Let's take a look at the charts, some of the trends that we're seeing. Rick?
Yes, so an explosive move to the upside that happened almost a year ago at this point here, back on earnings in February, was the catalyst for a lot of this upside movement, and we retreated all the way back down almost to that purple 252-day EMA, but that gives us this blue trend line to consider then. We had a bit of a breach on August 5th. That was kind of a strange situation there for a lot of financial products here, so kind of an outlier data point there, but connecting these lows here and here. Now you could say that, well, we also had this downward sloping trend line starting at the highs, and it's been kind of messy lately. We've seen breaches to the upside and the downside. Now we're kind of back within the boundaries of both of them. We are in right on the money of our orange 63-day and yellow 21-day exponential moving average as well. So it seems like we're at a key inflection point right here near the 137 level. RSI exhibiting a similar triangular shape. We are above the 50 midline, but we are trending downward and right close to crossing over and generating that bearish signal once more. So when we look at volume profile here, we can see that once again we are in a node right here. So that adds even further weight to this area around which we are now. Down here as well, point of control, 252-day exponential moving average, and our -1 standard deviation channel, and our old lows here as well, all coming together near like 125 to 130. So that's another key downside area to consider. Then we've got our old lows here as well near 115. To the upside, we've got the highs here, and those match up with another volume node near about 164. Then our +1 channel near 176. So some more straightforward points to the upside to watch.
Yeah, it's interesting how, it's amazing with these stocks. You look in the beginning, you see that explosion to the upside on earnings where it powers higher, and then you're talking about the more recent lows that we're seeing. So it does show you the volatility of this type of name. Last final thought here, Joel.
Absolutely. Definitely, I think there's definitely some of those recent highs going back to November, about 164-ish or so. Again, playing the downside, I'm going to be slightly under that for cautionary price levels for me for resistance. So I'm going to sell the 155 call, simultaneously buying the 160 call, expiring Feb 21. Credit $1.40. My break even is 156.40. Price action currently is trading 139.32 right now. So I would need essentially a little more than about a $10 or so move to the upside before I start to get a little nervous. Because of that, I like the downside in the short term.
Yeah. All right, let's get to Netflix, which hit a recent high of 941. It's been an exciting name in the Mag 7, up 75% over 1 year. But the sell-off that we're seeing here today of 4%, it's one of the big sell-offs. We haven't seen a decrease like this since the spring. And you also had JP Morgan out with a call adjusting the price target to 1,000 from 1,010. Did keep an overweight rating on this name, but this sell-off is notable because we haven't seen one like it since April of 2020. Is there opportunity here, or what's on your mind here, Joel?
I think it's all about the time frame. I do think there's an opportunity if someone's looking for a longer term hold, because we also know that Netflix is the leader in that streaming arena. But in the short term, I do think that the upside could be a bit exhausted. I mean, to see the stock, the performance it's had has been really phenomenal as of late. But you and I both know, and I'm sure Rick will agree with us as well, that that kind of movement just can't last forever. Like we just can't see something just continuously have just an aggressive trend, the one side directional trend forever. We're going to see some kind of a pullback, or we're going to see some kind of consolidation. And I think that's just what this is right now, just some kind of exhaustion in one direction. So I am going to be a bear here in the short term, because I just think that we're going to just see some kind of a pullback as we have today.
Right. All right, Rick, final thoughts here on the technicals on Netflix.
Yeah, so for the most part, we usually look at one-year charts in this segment. I took it back a little bit further to November 2023, because that's kind of where this trend began, all the way back here, connecting these lows here and here. Once again, August 5th, that area was a outlier kind of data point there, and once again, connecting near here. So we can also extrapolate that blue line, put it across the top. That gives us this longer-term channel that encompasses the vast majority of our price activity. Around this earnings event here back in October, the trend accelerated to the upside, giving us this much steeper, much more narrow trend line in that light yellow, kind of whitish color there. Then we topped out right around here near 935, 940. Couldn't quite make a convincing strong close above that level. That's also where the RSI started to break down, and we saw bearish divergence. We fell below our yellow 21-day EMA. Now we are falling below our orange 63-day EMA and touching on the top boundary of our old blue channel there. RSI waning further as well. Not quite oversold yet, but a far more bearish reading than we saw recently here. So once again, when we include volume profile and standard deviation channels, the volume was here around 900 to 925. Not a very clean spike area, but more of a general zone of heavy trading. You can see here that we have also crossed below our blue linear regression line today. So around 840 to 845, we've got a lot going on there. That could be a key area to hold. If we move lower, 750, that's the next volume node. Then we've got our -1 channel and our old blue trend line and this gap level right here, 736 to 745 or so, around those points, Nicole.
You know, Goldman Sachs is looking at some of those same levels, because they had a 750 target, which now they're stepping away from this week on the 8th, and put an 850 target, right? So that was near that 845. But a neutral rating, unlike JP Morgan, which had the overweight and the $1,000 target, but still they have the 850 target now, and that was on January 8th. Joel, final thoughts.
Early December, we saw this stock hit roughly about 941 and change. Since then, we've seen a bit of a range bound between since that high and about 900. And right now, we're breaking down below that 869 level or so. I think this is going to really put more pressure on this stock to build value at maybe some lower levels before there's some momentum back to the upside. Because of that, I'm a bear. I'm going to sell the 895 call, simultaneously buying the 900 call as a hedge. Collected credit of about $1.70. My expiration date for this vertical spread is February 21st, and my break even is 896.75. So I'm going to use that 900 level, just shy of that 900 level, as a bit of a resistance, and hope to keep all the premium that I collect here in this trade. So we'll see what happens, but I do think Netflix is a bit weak here.
Okay. Great to see you both for the big three here. Joel Hawthorne, Retail Trader Magazine, and our own Rick Ducat there on the charts, looking at Alibaba, ARM, and also Netflix here on the big three. Thank you.